when you have a golden zone that overlaps like that, we call them staggered golden zones. And what that means is that price has consistent movement in the same direction.
Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Have faith in your mind, have faith in your grind, invest in yourself, transform in your time. Trading get paid, trading get paid, trading get paid, trading get paid, trading get paid,
All right, so we're talking about fibs, and you know, some of you, especially those who are new, you're asking what is this indicator. You guys know, those of you who have followed me for a while, you know what I do. I don't use indicators. The only time I use an indicator is if I'm the one that built it. And this so happens to be the indicator that I built. And so me and Jay, we came together, we put our brains together, and we used our own strategies, and we had them coded into an indicator. And this indicator is super fire, which I'm not going to get into tonight too much. But if you don't have the indicator, you need to go on the website and go get the indicator. It's definitely highly recommended. Those who are using it are using it and winning with it. So now here's this. We just had a trade set up the other night. I thought was interesting. When you look here, when you look here, this was an interesting trade setup that I sent you guys. And so what happened was you had to move up, you had to move down, and you had to move up. Now, this is an interesting little pattern here, because really what happened was you had a move here, right? You had this move here, and then you had the break to the upside, and then from there you had this move here, which really, if you can come right here. We get rid of these lines here, and this was a nice little move right here. And so once we got that, we got the break, break to the downside, and that was nice. Well, how do we know which way it was going to go? Now, of course, when I send the trade setups out, if you'll go back and look at that trade setup when I sent it, you'll notice that I sent an update. And what I was waiting for was I sent it out early, and that was intentional. I sent this out, and I wanted to see where we were going to be. I gave you a sell zone, and I'm not going to mark it up completely, and I gave you a buy zone. Okay, but then after maybe a couple hours, right before trade session came, I gave you a tighter area. And the reason is, and it was like right here. And the reason is because and why I tightened it up so much was because at that point, I kind of already knew it was going to go to the downside. And I wanted to make sure that those who took the trade had a nice tight stop loss. So I don't know how you take the trades, but if this is your zone up here and you get a break to the downside, normally someone might put their stop loss just outside of the other side zone, or maybe if you really know what you're doing, you'll come in and come to structure. I don't know. But what I didn't want to see happen was I did not want to see people put a stop loss out here, because that was just way too much risk, way too big. But I wanted to let the market do what the market wanted to do, and I wanted to let the market kind of move. And so once I saw that it pushed down like this and then pulled back right here, once I saw that little pullback right here, I was very confident to move this down right there. It was actually at that little line right there. I made it. And so I was happy to move that there, because I knew that from here to here was a pretty minimal risk. It was pretty minimal if you were looking to take the whole thing. you could literally, you know, if you were looking to eat the whole thing, you could do a 26 pip risk and take it all the way down. However, I tell you guys, I want you to take 10 to 15 pips and then the rest is on you. So what do? What I would tell you to do is wait for this to break, and then we would set our risk at this level in here, okay? Because you have structure and you have guides. And so really nice right there, because at this point, I mean, you're barely risking anything. You're barely risking anything at all. I mean, 8 pips. And so that's really nice. And so that was a nice setup. It dropped down. And how did we know? Well, once we had that pullback right here and it started to push back down, here's what we could do. We could literally come from here and drop our fib, right? And so at that point, when we come in here and we have price that's breaking out like this, or in this area right here, what do we think is going to happen? We think that it's probably going to come down and retest the golden zone. And so the likelihood is that we're going to get a pullback, because we really haven't had a genuine pullback. Because look at this. From here to the first move, right? From here to here, low to high, we only had a 23, a pullback to the 23.6, right? That was a very shallow pullback, very shallow pullback. So when we seen this extend, once we seen this price come pull back and then push back up higher than this right here, once we seen that, we knew that that shallow pullback was going to give us more bullish movement. So it gave us the more bullish movement, comes up here, gives us the rejection. And then now we can look and see where the golden zone is. Are we going to get a nice pullback? Well, it didn't get exactly to the golden zone, but within a few pips of it, you know, 10 pips or so. And so we kind of already knew that once this broke, this was going to try to pull back, because unless it was going to come, it had to at least come to here. Does that make sense? Once we had this low, high, and then we had this shallow pullback at the 23 from here. Once we had a new high, well, guess what? If we took the break right here at that structure level, we look for 10 or 15 pips. The minimum that we think we're going to get is down to here, because at some point, if this is an uptrend, it's going to pull back and then push back up, but it still has to get to that golden zone at some point. So we think it's going to get at least to here if it's going to continue up. Okay. So when we seen that the price was breaking out right here, we knew that with minimal risk, notice how the indicator threw a line at the 12, and then with minimal risk, and then look at this, to there, right, to here, that's a lot of pips. That's a lot of pips, you know? So I mean, you're talking about something that is extremely heavily in your favor, extremely heavy in your favor. And even if it doesn't go all the way down, let's just say we had another 23 line, right? Let's say it did come down to the 23 again, which it very rarely would do that. It wouldn't come to the 23 twice in a row. But even then, you're talking about a 40 pip, 37 pip, 38 pip drop. So either way, we're pretty happy at that point, because we have great risk to reward in our favor. And that's why I like that sell zone that I gave you guys, because it was heavily in our own favor and it had structure to back it up. Does that make sense to everybody? Awesome. Awesome. So when we saw that, here's what's really cool about it. I want to show you something pretty awesome here. Those of you, some of you may have heard me teach this before, but when you drop a fib, you want to come from the bottom or from the beginning of the move, and you want to come to the high, from low to high or from high to low if it's going the other way. All right. So 1, 2, and we see it came here and it only came to the 23, right? We see it only came to the 23 right here. So we expect that things would like to try to come to the golden zone, right? So let's just say, okay, so here's our golden zone, and price obviously did not come there at that point. So then what do? Is we can wait for the next high, right? We wait for the next one right here. Well, here's what's cool about it. Watch this. We drop our golden zone. All right. Notice how those golden zones are staggered. Notice how those golden zones are overlapping one another. This shows you, number one, that this area where they overlap is a very, very powerful zone. And when you look back, if you look at that zone, well, we'd probably have to go to the 4 hours to look at it. Let me do it this way. I'll make it easy for you. All right. If we look at that on the 4 hour, we'd have to go back quite a ways. But if you were to look back right here, you're going to find that that area right here is a very strong area. Okay. Very strong area. See that? I could drag it out for you. All right. Very, very strong area. And that's the area of overlap of your golden zone. So watch this. When you have a golden zone that overlaps like that, we call them staggered golden zones. And what that means is that price has consistent movement in the same direction. So in other words, let me get my annotation. So in other words, what it means is that we have high, low, low, high, lower high, a higher low, higher high, right? And at that point, we have a consistent trend. We have an A, B, C, D that matches one another. Okay. So we see something that is consistent. Now, when you start to see those zones come apart, that tells a whole nother story. And that is actually a very exciting story that we can use in our favor. So watch this. Price comes down. It doesn't quite get to the golden zone, but it's within a few pips, and then pushes up again. So what are we going to do? We're going to come right back to the beginning. And the same way we did this right here, right? The same way we did this one, the same way we did this one. Now we have another low is the same way we're going to do this one. All right. Now look. Now you would think, wow, what a big move. What a big move. Surely the golden zones are going to be apart now. Well, they're not. And the reason is that's because we had a deeper pullback. This pullback only came to the 23. This one came down past the 38, in between the 38 and the 50. And so because of that, we had another staggered golden zone with the overlap being nearly identical. All right. What do I mean by that? So watch this. The overlap here, this overlap, I'm going to make that a different color for you so you can see it. All right. Make that right there. That overlap right there. Watch this. Copy and paste. Look at how nearly identical that is. Look at how almost, I mean, it's literally almost identical to what the other one is within a pip. So what does that mean? It means that the next move, even though if you were to look at this with no markups, you would look at this and you would think that this was really not an identical trend. But what it really, when you see this here, these moves here that are almost identical, what it's showing you is that even though the pip count or the ATR is different here and here, it is different here and here and here. The structure of the move is perfect. It's exactly what the move was anticipated to be. There was no manipulation. There was no need for manipulation. The market did what the market was supposed to do. Okay. So now, when we get to a point where a trend is starting to run out of steam, those of you who've been trading for a while, you'll know this. The buyers in this case are in control. And what we're going to see at some point when the buyers are running out of steam, what's going to happen? Somebody tell me. Correction, consolidation, divergence. That's really good. Pull back to the 50. Yep. Wicks, a lot of wicks. That's good. Seller step in. All of that is right. All of that is right. Everything you just said. But watch this. Notice how that most of the time when a trend is over or when a move is finished, here's what happens. You'll see where it looks like it's running out of steam. Pullbacks start to get deeper. You know, it went from a 23 to a 38 to a 50, you know, real deep pullbacks. But you'll also notice this. On the last pullback before, or the last extension, I mean, before a reversal, and it's not 100%, but it's very high percentage. When the buyers are running out of steam and they know that sellers are imminently about to take over the market, that it is imminent for sellers to take over the market, what happens? Boom, big move. You'll see this, maybe a nice correction, and then a big move before the big down move. And why is that? Yes, Daniel, good. You'll see that on the higher time frame, that's a big wick. It's a wick out. But on the 30-minute or the 1 hour, or whatever we're trading like this, you know what that really is? It's number one. It's there you go, Terry. It's a liquidity grab. And what happens here is the buyers say, this is what we have left. We're going to put everything we have out there for sale and try to get, since everything is about to sell, we're going to try to get the highest price. So buy some, move the price up, sell everything we own. It's what Elon Musk is trying to do at Twitter right now. Right? And so what happens is they push the price up because they know that sellers are coming into the market. So what happens is, would you rather sell for 177 or would you rather sell for 178? And it's common sense, right? If you had a million hats and each one was going to sell for $1.77 or $1.78, which one do you want to sell them for? You want to sell them for $1.77 or $1.78? You want to sell them for $1.78, of course, because for me and you, that 1 penny doesn't matter that much. But for them, when you're dealing with millions and millions of dollars, that 1 penny on, $2.4 trillion or something of GDP, right? That moves in the market every day. When you're talking about that, when you have 2.4 trillion pennies, we're talking about millions of dollars. So that last push is one more extension to push the price higher before the price drops down and the sellers take over and we start creating opposite direction structure.